Hi, and welcome. You're listening to the X22 Report. My name is Dave, and this is episode 1452A, and today's date is December 19th, 2017, and the title of the episode is The Transition Begins. The World Economic Structure is About to Change. Now, before I get started, I just want to make a couple of announcements. First of all, we're coming towards the end of this year, 2017, and I want to thank all those individuals who've been listening to me, who supporting the X22 Report. I am very thankful, appreciative, and grateful that you take the time to listen to the reports. Thank you very much. I really do appreciate it. Secondly, I wanted to give back, and I wanted to open this up to those people who are starting their own alternative media news sites, and I think we need more of them out there. And what I would like to do is I would like to place your video, your article, or whatever you have on the X22 Report. I'm setting up a section where this will pick up your information and display it on a certain section of the X22 Report. Now, there's no money involved. I'm not asking you for anything. I'm not putting any advertisements on it. This will be strictly to help your news channel, to get your articles out there, and to give back and help others who are trying to start their own alternative media news site. Or if you have something to say and you want to say it. Now, I'm going to be looking at all the material that's coming in, if anyone wants to do this, and I will decide, yes, this could be put up there, no, this can't be put up there, and I need to look at each and every one of them, and if your site is selected, or your YouTube channel is selected, or your Steemit account is selected, I will continually set up the system where it's automated, where every time you put something up new, it will display on the X22 Report. And I just wanted to open this up to those people. And if you're interested in doing this and you're serious about doing this, just write me an email at contactus@x22report.com. Or you can go to the x22report.com site. Just go to the tab that says Contact Us and fill out the form, and it will send me the message. And what I'm going to need from you is, your site or your YouTube channel or your Steemit account or whatever you have. Just let me know so I can get the information, take a look at it, and I will write you an email back letting you know that yes, I've placed it on the X22 Report. And this is just to help people and to spread the word that there are others out there, and let other people and expose you to more people. I've been blessed where a lot of people do listen to me, where people continually come back like yourselves, and I am very thankful and grateful, and I wanted to open this up to everyone out there. So let me know, send me an email, I'll look over all the stuff, and starting in the new year, I'm going to start placing this stuff on the x22report.com site. Let's get into the economic collapse financial news. Now, we are starting to see a lot of things occur in the economy around the world with the central bankers, with the cabal, with pretty much everything. Now, we understand the UK is trying to break away from the Eurozone, and they're saying that they're going to be trying to do this by 2019. And we see already that the Eurozone, they're trying to make their case, and there's a report from the auditors at the PwC, and they're predicting that the Eurozone growth will be above 2% in terms of purchasing power next year, which will be far above Britain's economic growth. Now, what's very interesting about this is all these different organizations that love to make predictions, well, they never really come true. Now, they're saying that the UK growth will reach around 1.4%, where they're saying that the growth of the Eurozone is going to be around 2%. Now, we need to go back in time a little bit. And the reason why before I say that, the reason why they're saying this is they're trying to convince everyone that if you leave the central bank system, which really the UK is not doing, they're just leaving the Eurozone, but they're really not leaving the central bank system. If you leave us, you will not do as well. This is why they never mention Iceland. Iceland, their economy is booming. They put their bankers in jail, and the Eurozone right now, they're struggling. Now, remember, the PwC, they predicted the global economy will grow almost 4%, and it didn't. Now, we can see right now the IMF does this, the Fed does this, the federal government does this. They always put up these numbers telling us that, it's going to be like 3%, 3.5%. And then as time goes on, it always turns out to be 1.8%. And remember, these are manipulated numbers too. Can you imagine if you stripped away the manipulation? What would you have? You'd be in the negative territory. And if you go to John Williams' Shadow Stats, you can see that the GDP numbers for the United States are in the negative area. Now, what's very interesting about this holiday season, they're making it a really big deal to let us know that the retail industry is doing well. And we're starting to see the same exact signs that we saw back in 2016, where during the holiday season, during the best time of the year for retailers started to close stores or to declare bankruptcy. And back then, I think it was Aéropostale and many other stores that were closing up shop. And right after the holidays, then Macy's came out and the rest came out and said, yeah, we just didn't do well. And everything did not move to Amazon. Amazon is only 3% of the entire retail industry. Online sales is 10%. Maybe it'll move up to 12%, but it's a small little sliver of the entire retail market. Now, Toys R Us is considering closing at least 100 stores or as many as 200 stores during the holiday season. What are they saying? They're saying there is a sharp contraction in sales, which declined 15% this Christmas shopping season from a year earlier. Now, this is kind of strange because when we look at what is happening here, the unemployment rate has come down to 4.1%. GDP is continually moving up. The stock market is skyrocketing. The economy is supposed to be booming. Why are these stores having trouble? It's not online. It's because the everyday person, they're not making the same amount of money, or they don't have the job. Wages are declining. Credit card is at its max. Credit is at its max for many individuals. Many people have gone from a full-time job to a part-time job. Many people who've had a full-time job can't even find work. And they're talking about laying off between 11 and 22% of the company store base. And this is going to have an effect on the total economy because we're going to see a lot more people out of work once again. Now, what's very interesting is we're seeing a lot of similarities between 1999, 2007, and 2017. And when we look at this, we can see that there are a huge amount of similarities. Let's go back to 1999, for instance. The Fed was hiking rates as worries about inflationary pressures were present. Sounds familiar, doesn't it? Economic growth was improving. Okay. Interest and inflation rates were rising. Earnings were rising through the use of new metrics, share buybacks. Margin debt leverage was at the highest level on record. Stock market was beginning to go parabolic. Speculative assets of choice were .com stocks. Let's move to 2007. The Fed was hiking rates as worries about inflationary pressures were present. Economic growth was improving. Interest and inflation rates were rising. Debt and leverage provided a massive buying binge in real estate, creating a wealth effect for consumers, and high valuations were justified because of the Goldilocks economy. Margin debt leverage was at the highest level on record. Stock market was beginning to go parabolic. Speculative asset of choice, real estate. 2017. The Fed is hiking rates as worries because they're worrying about inflationary pressures. Well, isn't that the same thing they've been talking about in 2007 and 1997? Economic growth is improving. Interest and inflation rates are expected to rise. Earnings were rising through the use of new metrics, share buybacks. Stock market was beginning to go parabolic. I mean, these are the same exact things that happened during those periods of when everything fell apart, when we entered a recession or the Great Recession. And this time the speculative asset of choice is Bitcoin. And we can see there are a huge number of similarities right now. And we understand that this is the way the central bankers work. It's the same exact thing over and over and over again. And this time it's not going to be any different. Actually, it's going to be worse because they didn't do anything to improve the economy. We see the central bankers out in the EU, and we see that they're trying to lock down cash, lock down gold, and they're trying to go after anyone that has any of this. And right now, there are new EU rules for cross-border cash and gold bullion movements. Now, the war on cash, that is continually ongoing because they don't want people to have cash, because what they're afraid of is that people are going to take the cash out of the banking system. Now, of course, what they're doing is they're creating these new definitions for cash and gold and everything else to say, the reason we're doing this is to stop criminal activity, money laundering, or terrorist financing. This is what they're trying to convince everyone of that these individuals use cash, gold, and other type of assets. Now, the legislation will allow authorities to seize assets from those without a criminal conviction. New rules usurp those currently in existence since 2005. Now, what's very interesting is they came out with a name, and it's called European Parliament Civil Liberties and Economic Affairs Committees. Now, of course, this has nothing to do with any of that. And what they're doing right now is they're introducing tougher checks and controls on cash entering or leaving different regions. Now, currently, individuals are required to declare cross-border cash sums of 10,000 euros or more under the first cash control regulation from 2005. A new decision will repeal the CCR and allow authorities to seize cash below, that's right, below 10,000 euros, should criminal activity be suspected. Now, what does that really mean? Well, if they suspect something, then they can go ahead and do this. And we see right now they're doing this on purpose because they want to make sure that they control the entire situation. This is because the system is eventually going to come down. They don't want bank runs. They want all the cash to stay in the banks. They want to make sure, and this is why it's very difficult to get cash out of the banks. They want to make sure that everything is inside of the banking system. So when everything comes apart, what they can do is they can go inside and take those funds to prop up the system once again. This has been their plan for a while, and they're continually using this plan and going down this track because they think they're still in control. Now, what's very interesting is Saudi Arabia right now. We understand that their economy is not doing well. They confiscated a lot of currency from very wealthy individuals in Saudi Arabia to try to boost the economy. They spent a lot of money to stimulate the growth as the oil prices continually dropped. And what we're seeing right now is that the Saudi economy is contracting. And of course, what they're trying to tell everyone is that they're expecting the GDP to grow by 2.7. We know this is not going to happen. We see that they're going to have a deficit of about 52 billion for 2018, and their entire system is imploding. This is why they're making deals with Russia, because they realize what is happening. The dollar is dying. What they've done is not working because they listened to the cabal. They tried to put pressure on Russia. Didn't work. They tried to lower the oil prices. To do this, they also lowered the oil prices to keep the economy running here in the United States, because lower oil prices means the gas prices are lower. People have more money in their pockets. They were hoping that people were going to spend this money in retail, and it really didn't work out that way. And also, for deliveries, lower oil prices means higher profits for companies. They lowered their prices a little bit on food and other deliveries, but they pretty much kept it up there, and it allowed them to make more money delivering these products or getting shipments into them. And we see right now this is all being done because the system is coming to an end. And once the system enters the stage where it cannot be supported by all this manipulation and everything like this, we're going to see it start to break down. We're starting to see this in certain areas, like the countries out in the Middle East where they're not dealing with the petro-dollar. And if you go back many, many reports ago, we said that eventually this would happen, where eventually these countries would not use the petrodollar. And here we are today. And remember, China introduced the petro-yuan, and they've completed their 5th round of yuan-backed oil futures. They're finished with the tests, and they're hoping that the yuan price crude futures, they're hoping that this is going to go live on Christmas. And what this means is that countries now will be able to use this. Now, the contracts enables the country's trading partners to pay with gold or to convert yuan into gold without the necessity to keep money in Chinese assets or turn it into US dollars. It has the potential to help China push the yuan for internationalization, which they want to do. And this will open them up because remember, they're starting their new trading system, the Belt and Road Initiative. And we can see that they need the yuan to be internationalized. This is what the central bankers want. This is the beginning stages of the new system. And we can see the transition is already beginning. And the Trump administration, Trump was out there and he has this whole new strategy right now. And if you notice, the heart of the national security strategy, it is about trade. The trade policy is at the heart of the new national security strategy. And the reason for this is because the United States is going to have to find their place in the new world trading system. Because as we can see, the TPP, well, Trump got rid of it. The petrodollar is no longer going to be used. That's going to be discontinued. The dollar is no longer going to be the reserve currency of the world. Trade is going to completely change. It's going to move from the United States, where the bulk of the trade was happening, because people held dollars, and it will be out in China. Remember, when they move everything, everything moves, not just little pieces. This is why they've been preparing this for a very long time. So the United States needs to get on board with the One Belt, One Road initiative. If the United States is not on board and it's, and makes a deal with China or Russia or any other country, the United States is going to be screwed. And Trump knows this. Those who are in power know this, because what we're seeing right now is everything, the entire economic world structure is about to change. Just like it changed when the United States came off the gold standard and moved on to the petrodollar system. And for those people who remember, when that happened, well, a lot of people didn't have work. We saw a huge amount of inflation at that time. We saw that we couldn't get oil, so the gas lines were very long. Things were out of whack, and this was coming on to a system that the United States was going to control. We're coming off of that system. And the United States is no longer going to control it. The United States is not going to have the reserve currency of the world. This is why we see the opposite happening right now. Coming onto the system, inflation. Everyone got a bump in wages. Real estate increased. We saw people earning money on CDs in the bank because the interest rates were very high, because we had inflation, because the government was creating currency, or getting the currency from the Fed, which loaned it to the government, and we see that caused inflation because a lot of dollars in circulation, which really means the devaluation of the dollar. So they countered it with high interest rates. And as we were coming onto the petrodollar system, we couldn't get the oil here in the country. It wasn't shortages. The system wasn't online yet. And of course, the corporate media was out there saying there's a huge amount of shortages. Hopefully we can find oil. And this is why Nixon said, okay, we're going to lower the speed limit from 65 miles an hour down to 55 miles an hour. And this would save, of course, they used the idea that we were helping the world by saving energy and cutting down on fuel costs and things like that. But really what it was to basically balance out the amount of oil that was coming into the country and make it so that people don't use as much until the system was completely online. And we see that once again, we're on the opposite side of this. Wages are not increasing, they're declining. Interest rates are not increasing, they're declining or already in the negative territory. Countries are coming off the petrodollar system. When they come off the petrodollar system, it will be difficult to get oil in this country once again. It won't be because of shortages or anything like that. Actually, coming off of this, the products that are in the stores, it's going to be very difficult to get those products too, because we're no longer going to be the reserve currency. We're going to go through this whole transition phase, and it's already begun. People don't even know it yet, but we've been following this, we've been tracking this, and it's already started. And we can see that this has been done a little bit at a time, and this is the way the central banks work. And here we are at the end of the system, where people don't even make any money in the banks because the interest rates are so low. So we're starting to see that things are starting to fall apart. We're on the opposite side of the system, and you can see how it looks up to be on the opposite side, because everything that was happening when we were coming onto the system looked great, and now we're on the opposite side, and everything doesn't look that great anymore. Where we don't have high interest rates, people can take their funds and put it into CDs. Wages are continually moving up. There are more jobs opening up, and retail was growing. Everything was growing during that period. And when we got into the 80s, it was even better. Now we're at the end stages, and we're not seeing this. So the transition has already begun. You need to be ready. You need to be prepared. You need your food, your water, your supplies, because you can see how this is happening. And if you've been following what we've been doing here, you can see each time they do something else. And when I say they, it's the central banking system. They add on or they continue on, and they move the system a little bit further along here. And here we are today, and during the year of 2018, we're going to see a lot more of this. And the transition's going to continue, and then all of a sudden it's going to hit the United States, and people are not going to know what is happening. Just like when we came off the gold standard, all of a sudden there were no jobs, interest rates were skyrocketing, and there were oil shortages and all these things. We're going to see the same things, but it's going to be a lot worse this time, because the United States is not going to keep the reserve status anymore. It's moving away from the United States. So it's going to take a little bit of time to go through this transition, and people are going to have to be prepared for this. Listen, everyone, thanks a lot for listening. Be well, be safe, and especially be prepared. Thanks a lot.